Why do companies sell shares as stock? Imagine a company needing a big sum of money to grow or develop new products. How do they get that money without borrowing or taking on debt? The answer lies in selling shares as stock. When a company sells shares, it is offering pieces of ownership to investors. These investors buy the shares, giving the company cash to fund its plans. This practice started hundreds of years ago. The Dutch East India Company, formed in the early 1600s, was the first to sell shares to the public. They did this to raise money for risky ventures like overseas trade. Investors bought shares, which meant they owned part of the company and shared in its profits or losses. This way, many people could invest small amounts instead of one person putting in all the money. As time went on, stock markets developed in Europe and the United States. Stock exchanges like the Amsterdam Stock Exchange, the London Stock Exchange, and the New York Stock Exchange made it easier for companies to sell shares and for investors to buy and sell them. These markets created a place where shares could be traded quickly, giving companies access to more funds whenever they needed. Selling shares also spreads out financial risk. Instead of relying on loans that must be paid back with interest, companies share the risks with investors. If the company does well, everyone benefits. If it struggles, investors share the losses. This encourages more investment in risky but promising projects. Going public by selling shares also makes a company more visible and credible. It can attract more investors and get better terms for future funding. The stock price provides a market value for the company, showing how much it is worth based on what investors are willing to pay. The money raised from selling shares is used for many purposes. Companies invest in research and development, expand their operations, buy other businesses, or improve infrastructure. This process of raising capital has helped economies grow since the Industrial Revolution. Large projects that could not be funded by individual owners alone became possible. In short, companies sell shares as stock to gather funds efficiently, share risks, increase visibility, and support growth. This method has a long history and remains a key part of modern financial systems and markets. It helps companies thrive and drives economic progress around the world.